Good afternoon. Welcome to Options Tender. It is Wednesday, Wild Wednesday. We got another new low. We're going to check out what is going to happen coming up soon here. We think we're in for the bounce. I know we've been saying that. We've been looking for it. We weren't sure if we were going to get a higher low or a lower low, but we got our lower low. And I do believe this is complete. I'll show you on the daily time frame. We're going to look at a couple indicators. Also, we'll go down to the 65-minute, and maybe we'll, if we have a little bit of time, don't want to make this too long, we'll check out in the 65 QQQ and the VIX. Okay, so if you're new here, go down to that bottom right-hand corner, hit that Options Tender logo, and subscribe. And don't forget to like the video. That's the most important thing you can do for this channel is like the video. And if you want to help out even further, in the description, you can check out those links there. Okay, so we have SPY on the daily time frame. We're looking at this being a 5-wave move down. We had completed our 5-wave move. We weren't sure with this red indecision candle. It's an inverted hammer. We got a reversal off of it, but we're rejecting off of it. We gapped down underneath the 200 and reversed off of it. This is still a concerning area. This is a area of reversal that we're looking for, despite the fact that we have the 200 moving average right underneath it. I still think this is just a consolidation area. So we're starting to get these positive divergences, and I'll show you those in just a minute on the daily time frame, and that's pretty serious. So we should get a decent sized move into what I'm guessing will be the FOMC meeting next week on Wednesday. If this is a low here, then we should see some sort of ABC correction, and I'm still looking for about the 430 area for that correction to terminate before we'll be looking back short. Okay, that's also going to coincide with, let's go ahead and draw another line here, a trend line down to touch these tops at this point. So that'll bring us right into that zone with the downtrend as well. Okay, now if we're looking in here, I know I have these boxes drawn. They're pretty. I'd say it's more of a zone. They're rough estimates. It's just diagramming something. But we have on our low today 417.02. Now that gets right into the area. Look at this low, 416.22. Just a little bit lower. The high here. The high is 417.62. We actually tagged underneath that high. In this one, I believe it's just even higher there. So 418.31. So we're in the zone already. I know it doesn't look like it because we have this gap here. We're in this zone, and we're getting into this support zone. If we turn on, let's go with these. Let's start from left to right. We're getting into this zone with positive divergence on the MACD. We are back into oversold territory with positive divergence on the RSI. We're oversold on the Stoke or RSI. That should be starting to roll over to the upside. And same thing, we're trying to cross over, so early buy signals on the slow Stoke here. And so what this is saying, every single condition, we're looking for a reversal. Do we head down just a little bit lower? Possibly, but we'll check that out in the 65-minute time frame, and I'll show you why I don't think so. Let's go ahead and move over to the reversal. This is my reversal setup. So we'll zoom in here just a little bit more. We have the MACD, which we just saw, with positive divergence into support here. We have that that pivot. And they also call this, you see this almost like a ladle, upside down like ladle. This is this would being the like the stem. This is an H pattern. Okay, this looks like an H, almost like a chair, where this gets divergence on the bottom. They call that an H pattern, and then we head higher from that point. Okay, again, positive divergence on the RSI, and most importantly, the Williams percent R just formed this slight divergence right here today. So super important. We have all the conditions for a reversal. This is a very accurate tool. Use this all the time. We caught this reversal up top here from this negative divergence, and then being oversold with divergence here. Overbought, excuse me. Okay, so we're looking for this. Maybe we get a pop by the end of the day, but just remember, JPOW is at 4:30 p.m. We have Meta, which, you know, I'll go ahead and look at Meta since we're on here for earnings. And then in the morning, all sorts of, we have GDP and et cetera, et cetera. So I'm guessing that maybe we get a pop into tomorrow. You know, we're going to have to make a higher low. So we're not going to go straight up. So we're going to need some time where we're bullish on Friday and on Monday. We see a turnaround Tuesday for a reversal, and then a impulsive move to the upside going into FOMC. I don't know how that's going to work. This timing is just strictly speculation with the timing of this, but I'm looking for a reversal into tomorrow. Specifically into tomorrow, because we're already at our lows with all these conditions in place. This one's just this shows we have our MACD with we're just showing our trend. We started trending again to the downside. Looking at the McClellan oscillator, we have our positive divergence. This is a daily time frame, remember. So this thing is going to reset. It's going to reset. I don't know if it's going to reset by the time we get our bounce, and then it'll, you know, that will be, if that's about it, that will be a fast reset here on that bounce. But we have double divergence going in here. Divergence here, and now making this new low today, another divergence. All right, so let's go down to the 65-minute. And on that 65-minute, we want to see if we can learn something a little bit more. Yes, we do have room to go down. We do have a little bit more room, but we're forming this wedge, and we're still consolidating within this wedge. We're right at support and reversing off of here. It does appear that we have our 1, 2, 3, 4, 5 wave move down. Let's get down to the 5-minute real quick so I can show you that this would be an ending diagonal where this is 1, 2. These are all in 3 waves. 3, 4 crossing over wave 1, and then 5 heading down here. Okay, so that's a complete, where wave 3 is bigger than 1, so it doesn't matter what wave 5 is. This looks complete, guys, right into support. And so that's a 5-wave move that should end this entire move that we're talking about, our 5-wave move down here. That should be the end. I don't see any other scenario. Let's go to the Elliott wave. See, by the way, that this resistance is on the hourly is drawn support is drawn just a little bit different, because I want to catch those highs. I didn't move that. I did not move these resistance support lines. This has been here for quite some time, being the ascending triangle, and this is where we made it into support and then broke out from here. So we're already there, just barely tagged it, and now we're still in this wedge. It's a bullish falling wedge. And let's look at the Elliott wave count. So we're going to change this count up just a little bit. Not even change it. We had the options here already, but now we're going to pay attention to, you see in the red, it's very light here, but there's a 1, 2. I did have to update that. Okay, so that's more appropriate. Now, 1, 2, 3, 4, and our 5th wave down being the ending diagonal. So this is now the turquoise wave 1. we are going to get some sort of ABC correction. So these are just placeholders. It's not exactly where it's going to go. We're looking for, at minimum, this reversal to get up to the 50-60% retracement here. Now, I have these marked down. That was just a guess. But now I'm going to raise that up here. This is from the top of this 5-wave move down to the bottom. So if we get some sort of just really bullish move, we'll be prepared for price action to reach these levels up here before actually reversing, and we'll have this downtrend line here as well into this zone. So there's two spots. If we get and hold above 430, then we're going to be looking for a different setup here, 438 to 443, but very cautiously, because price can even reverse some here, anywhere up in the zone. This price can reverse at the 786. These are just typical zones, but this is the one that I'm really looking forward to. And maybe we already reach these levels by FOMC. Maybe we're at the 62% retracement by FOMC, and then we just drop like a rock, because that would be our 1-2, 1-2, 1-2 setup into FOMC. If FOMC it makes the market bullish, we'll have to see what kind of structure we have here. If it makes it bullish and it continues to the upside, then we're going to look up to these levels here. All right, but right now we're looking for this turquoise wave 1 to be completed here. An ABC correction into this zone, which is a confluence of the 382, the 62 from the recent highs, the 62% from this high to low. So there's all sorts of stuff happening here. It's going to be a tough zone to get through. All right, so this is our target area going into FOMC, being an ABC retracement. We should have our reverse going into tomorrow. Not in a straight line. We're going to work out a bottom, probably make an inverse head and shoulder type move, and then an impulse move into wave C. Now, we're counting this as wave 2, so we're going to keep our mind open for a zigzag. But it doesn't necessarily have to be. It can be a flat pattern as well. So we'll just have to watch these videos each and every day. So don't forget to hit the notification button. So ultimately, we have our reversal set up into, we have some time confluence here as well for the 23rd. And then going into FOMC, we have a couple time stamps as well on the 26th. We're looking at all sorts of things happening. We're right here into the 26th. We should see our reversal. Tomorrow's the 26th. We have a time and price confluence to also go along with that reversal type move. Okay? And then going into FOMC, with the time price, we'll see where price ends up. We have the 31st, the 1st, and another 31st confluence there. And we'll see where price ends up going into the FOMC on the 1st. Okay, so now let's check out QQQ. We'll go to VIX and then Meta. All right, you see this lower, we talked about this line yesterday. We tagged it again today. So just got right to it. We didn't move this line. It's been there. It's caused from the other reactions. Now it supports our thesis that the reversal at this move is complete. Okay, and we're looking for a reversal from this point. We should find buyers, break out of this channel, and reverse at this point. I'm not going to look at all the indicators. They're very similar. But we do have to look at this. The Elliott wave count, we again have our 1. We had a flat here for a 2, 3, 4, and 5. And we're also coinciding with that 62% retracement from recent highs. Okay, that's a very big area. Just missed about a couple dollars, but it might be just a little bit off here. Okay, now we're looking for an ABC correction. Let me adjust everything, doing this real time here. From top to the bottom, we should see about a 50-60% retracement. And again, I have the alternative retracement up here. This is our primary. We should see an ABC correction, possibly going to FOMC. And we're looking for a reverse from there. That would set us up as a 1-2, 1-2, 1-2 setup. And also it would, these different situations, I think I have it on the, maybe the daily time frame. Well, you could, yeah, I mean, we're looking at it in this point of view. If you redraw this into a bearish point of view, doesn't really matter where you put this. It can be down here. It's a big zone. You can redraw this. This is just for visual concept, okay? This isn't a definite kind of thing. It's just give you a visual of what might be happening. And this is a descending triangle. All right. So that would be our formation that we're doing. Descending triangle. It's not a bullish setup, kind of like the falling the pennant or bear flag or bull flag that we're thinking about. If you draw it like that, which it is, I mean, it's the shape of the. If you draw it like that, then your mind says, okay, this is most likely a bullish situation. If you draw it as a descending triangle, you're noticing that we're getting a little bit lower each time, but one of these times it's just going to break to the downside. Okay, retest and head lower. I know we're underneath it here. That's not the point of that visual there. Okay, we went through those. So again, we should have this bounce, probably going to the 200 moving average, and then heading lower. And then if we check out the VIX, the VIX came into our resistance once again. This acted as really, really good resistance each and every time. Just got over it this time, formed a wedge and broke back underneath. It was back testing. That's all it was doing today, was back testing. So we should see another drop in the VIX leading to a rally in the market. Okay, it's simple as that. That's all I want to show on the VIX. We want to break this support underneath here for the underneath 19, and ultimately, we did not make new highs, so this is just a corrective move. Ultimately, this is our impulse here because we made a new low here. So this is an impulse we want to correct, and then we want to go much higher in the VIX, and then the market will go much lower. All right, let's take a look at Meta. Okay, Meta going into earnings today. All right, so looking at this in the 65, you notice that we have, these are 3-wave moves, okay, to the upside. We made a high here, we made a new high, but we made a new high on possibly just a 3-wave move. This to me does not look like a 1, 2, 3, 4, 5. It doesn't look like that. This looks like a 3-wave move for an ending diagonal for a 1, 3-wave move for 2. Now notice Meta loves to trick you. This looks like a 5-wave move down, does it not? So 3-wave. So 3-wave. This is an A, 3-wave move down. We got a B here, triangle. And then a C. Very confusing. Very confusing. So 1, 2. Now a 3-wave move up for 3. And now what is this then, right? Say possible A, B, C. For an A, B, and a 5-wave move down for a C. So we're looking at a 3-wave move down. Possibly. Okay? If we're to be bullish. So earnings, if we're getting our bounce and reversal tomorrow, possibly Meta could be getting a brand new high here, and then we'll actually be looking for shorts if we can identify a trade setup, get an all-time high. That would be our 1, 2, 3, 4, 5-wave move ending diagonal high, and then price should move much slower. Now, just by chance, if it is bearish tomorrow, that just, to me, that just means that this stock is ultimately, in the long run, a lot more bullish than all the other ones, because it would be a 3-wave move that'd be expanded flat. So you'd be looking for an A, expanded B above that made all-time highs, and a impulse wave down. It could be pretty dramatic, but that would be more bullish than the other stocks out there, because you just don't end on a 3-wave move up. Now, I could really grind down here. Maybe one of these, a 3-wave move up for 1, 2, 3, 4, 5, but it just doesn't appear like that to me. All right, I'm not going to harp on this any more. I do think Meta, with the market needing to reverse here, in order to get that, I think Meta might be pretty bullish on there. If not, it's going to be one of 3 things: a bullish Meta, it doesn't matter, hawkish, it doesn't matter, whatever Powell says that makes the market go up at 4:30 Eastern Standard Time, or before the bell, the GDP, jobless claims, those such at around 8:30 a.m. Eastern Standard Time. One of those 3 things are going to make this market move up in order for us to get our reversal. All right, thanks for watching us here at Options Tender. Don't forget to like the video. Have a wonderful night. We'll talk to you soon.